Welcome back to another Black Sail Capital webinar. Today we got a really good friend, investor in real estate and many other types of investments that I haven't even learned about yet. He's also my tallest friend and also a mentor, and it's been a huge help to my learning and understanding of the commercial real estate world. Let's go ahead and welcome Seth SUNDBERG. How are you today?
Good, Will. Good to see you, man. Thanks for having me on.
Of course. Yeah, thanks for being here.
Sure.
Jackson, I know you wanted to kind of open up the first
Yeah,
question. Can you go ahead?
Seth, it's so good to be with you today, man. Thank you so much for
Good to
jumping
see you
on with
too,
us.
man.
Yeah, dude, we're really, just kind of want to echo on what Will said. He's helped us all a lot in our learning journey. He's jumped on with us, helped us with a bunch of questions. So just shout out to you, Seth. Thanks for being on and thanks for all your help. And the help, we'll get into it, how you're helping more and more investors as well.
Sure.
We'll definitely get into it and talk about it. But just so the listeners, and we'll have this recorded and we'll share this. So for our audience as well, just give just a little, if you don't mind, diving into your personal story, your
Sure.
backstory, right?
Yeah.
You used to play in the professional basketball. You used to play in the NBA. You had some speed bumps. Now you're doing real estate. If you don't mind, just kind of sharing what you'd like about that journey. And yeah, it's kind of a stark shift there. So yeah, I just want to hear a
Yeah,
little bit.
no, for sure. No, I appreciate you guys having me on, and I appreciate the kudos. One thing that I love about all you guys is, you do the things, right? A lot of people in this space, real estate's always been kind of a sexy thing. And, people, once they get into it, they go, oh, it's actually a lot of work, right? And, it's a grind, and some days are amazing. You're fired up, you're ready to take on the world. Other days you just feel like you've been kicked in the head, and, things are changing and moving. So, but you guys continuously do the work. You continuously, go after what you want. And it's an honor to help you guys along in the journey for sure. So kudos to you guys too for that, for sure. So Seth SUNDBERG, I'm 7 feet tall. Will mentioned, tallest friend, so I get the tallest friend award, which is awesome. I'm honored to have that. And I did play professional basketball for a while in my early days. Played for the Lakers for a while, and then played in 10 different countries overseas, which was a lot of fun. Got to see a lot of different cultures, a lot of kind of things that I got to compare. I didn't even know at the time how much that, being overseas was gonna impact the way that I look at real estate. And I had no clue I was even gonna do real estate at the time, but I did know, that my career was coming to an end. My time in the NBA was, my window to have a long career in the NBA was closing, and I knew I didn't want to stay in Europe forever. So I said, all right, what am I gonna do? I didn't know anything other than basketball, and this is, in the early 2000s, and I had made some money, but I'd spent a lot of money too, right? And realized that if I stop playing basketball, my income goes away. I'm gonna just spend my money until I'm living on the streets, type of thing. So I didn't want to do that. I was smart enough to realize that, and I figured, getting into, buying a couple houses would be the best way to kind of protect that money from myself. So I did that, and I didn't know anything about real estate at the time. Again, this is 2003, 2004. Bought a couple houses in Las Vegas. Again, just primarily just to protect the money that I had left from myself, as my career was coming down and shifting, and just really fell in love with the structure of real estate, really enjoy the debt and the equity side of real estate. And just that kind of propelled me to jump into it more. Ran a branch of a national mortgage company from there, for about 6 years. I had an investment firm at the time that we were doing a lot of residential stuff in. Made a ton of money, in that space, not necessarily because I'm, smarter than anybody else or anything like that, but it was a really good time in the market. And so, a lot of it was just kind of dumb luck at being in the right place at the right time. My dad used to have a phrase that sometimes it's better to be lucky than good. So that was definitely, present that time. Although I wasn't fully aware that it was more of a good market than anything, and I got pretty arrogant in that during that time. And in that space of arrogance, I figured I'd take on the IRS, and I did, and I lost, and I spent 5 years in federal prison for tax fraud from 2009 to 2014. Lost everything that I had built. That's not uncommon from what a lot of people were going through at that time, anyways, because it was the financial crash. people were losing property, losing all kinds of stuff. And, that was just kind of my journey. So, happy to chat about prison stuff if anybody's ever interested in it, for sure. But, also it was the hardest thing I'd ever had to go through, but one of the best things, because I really found out who I was, what I cared about, what my values were. And when I got out, in 2014, it was really building from zero. I do a bunch of work still today in the reentry space. I just think that space is broken. But also wanted to jump back into the real estate world again, but didn't want to be just on the residential side. And so started doing multifamily acquisitions in 2017. And, we've built up 7-foot solutions and 7-foot finance, under that. We have between my partners and I, there's a little over 2,000 units that we're in, and 7 different states. And it's been a lot of fun, really interesting to kind of switch from the residential space and move into the multifamily space. I know a lot of people are, that chasm ends up kind of being, fairly large if you just don't know what you're doing. And I can tell you guys a story about, a friend of mine that was doing a lot of multifamily stuff, prior to, and try to get me in it. And I was just like, I just don't get it. I just don't get it. So anyways, that leads us to today.
That's amazing. Thank you for breaking that down, and thank you for sharing. Yeah, go ahead, Will.
Yeah, I was gonna say, I've heard a story that you had learned underwriting on a plane ride. Is that right?
Tried to, yeah. So a good friend of mine, this is probably 2006 ish, and I'm in the middle of running a mortgage company, the investment firm, right? And things are going really well, and my buddy's smart guy, and was working for a boutique brokerage that at the time they had about 250 million in assets, right? So pretty substantial for 2006, and a real very respected CEO of that company. And so my buddy calls me up one day and he goes, "Hey man, like, what do you think about getting into, apartments and stuff that we do?" And I go, "Yeah, it's interesting, but things are going good on the residential side. Like, I don't know if I'm really that into it or whatever." He goes, "All right." He goes, I got this deal in Seattle I'm looking at, and I think it was about 150 units. He's like, "Why don't you come out with me, and, we'll go hang out, we'll party in Seattle, and I'll teach you how to underwrite the deal on the plane." And I go, "Oh, cool. Must be pretty simple to, to learn underwriting for a 150 unit deal. I just don't understand it." So, it's a couple hour plane ride from San Francisco to Seattle. So we'll figure it out on the way. So we do, and we jump on a plane. He's like, "All right, show me this." And he pulls out this spreadsheet, and immediately I'm like, "This is not simple." Like, this is not like, oh, A plus B equals C. So, he tries to show it to me, and I'm not the smartest guy in the world, but I'm not the dumbest guy either. So I just didn't get it. And he goes, "All right, never mind. Like, we'll just go look at the building, and then we'll see how it goes." And we get to Seattle, and we meet with the broker that's going to do the showing. And I'll never forget it. It was like canary yellow. The building was, all the buildings were just canary yellow. It was a big property, and
Value add instantly.
yeah, exactly. And I never looked at, multifamily before. And so we're meeting the broker, and we're walking through a couple units, and, I'm looking at it like it's a residential thing, and each unit has got, this and that, and what would I do, and et cetera, et cetera. And my buddy goes, "Just give me 1 second. I'll be right back." And so it's just me and this commercial broker, and that I'm like, I'm trying to look, not look like a dumbass, basically. And I'm asking the guy questions about what's happening and this and that, and and I could tell the guy was just like, "This guy doesn't know what he's talking about," type of thing. But a nice guy. And so my buddy comes back 10 minutes later or so, and he goes, "All right, well, I've seen enough." And I go, "All right, I guess we're done here." And, we shake the broker's hand and take off, and, go have drinks. So we're talking about it later on that day. And, basically what he was trying to do was see if, I guess, the garbage fees were pretty substantial for the building. And so he was trying to figure out a way to maneuver the garbage to be able to not have to pay those fees. And then, obviously if you can reduce the expenses, I know now, right, the NOI goes up and the value of your property goes up, and et cetera, et cetera, et cetera. So that's what he was ultimately trying to do. That was kind of the linchpin of the deal. And and he didn't do it. And I don't know if he regrets it, not buying it at that time, now, but that was kind of the first attempt at underwriting was on a plane ride to Seattle for sure.
Yeah. Well, how much was a 150 unit apartment complex in Seattle at that time?
It's a good question. I don't know the answer to that, but probably half of what it is now, I imagine. Yeah.
Anybody else have any questions on that topic?
No, I just can't imagine trying to underwrite on the plane without like secure Wi-Fi, calculator, ChatGPT, like Strat to soundboard, Will to call Will to be like, what's going on here?
Yeah.
So it's
No, for sure.
impressive. That's all I gotta say.
Yeah,
My head would be spinning.
it was too much for me, for sure. And at the time, I appreciate my buddy's, confidence in me to like, or confidence in himself, maybe to think he could teach me how to do it. And, in that short amount of time. But, one of the things that I will tell you for anybody that's listening to this, if anybody's interested in, all your listeners that are interested in learning, how we teach underwriting now, happy to give them, a 30-minute, video of what we do and, the spreadsheet and all that. You can just follow me on Instagram at Seth Sundberg and DM me the word underwriting, and let me know that, you guys, you saw this webinar, and we'll get that information over to anybody who's listening to this for sure.
For sure.
So,
awesome.
With that, I had a question. Do you teach underwriting so like obviously Black Sail Capital, we're in the boutique hotel space.
Mhm.
Does the underwriting you teach or like the brief synopsis that you give, does that kind of translate between multifamily and different assets?
Yeah, it's a great question. So the underwriting is specifically for kind of the standard operating procedure model of multifamily, right? It's buy an asset, find out where the value add is, determine the level of, difficulty to execute on that value add, and then what the after the business plan has been executed, what the aftermarket value is going to be, for that, right? And then see if there's a deal there, right? That framework definitely translates to any asset class, right? The spreadsheet that we use, if you guys are doing boutique hotels, right, you have an average daily value type of thing, right? There's different seasonalities that need to be calculated in it. That's not probably, included in the spreadsheet that we have, or, there's different nuances, right? We've talked about a couple different projects, and you don't just have the real estate, right? You have the business, like if you're doing a restaurant inside of that restaurant bar, right? You have a surf school, right? That's working on, different revenue, channels, and all of those things are kind of subsections of the real estate itself, right? So it gets a little bit more complex. And, for that, I think that's one of the benefits and the opportunities that are in the boutique hotel space, right? Than kind of the standard operating procedure, like I said, of the long-term tenants and just having the real estate itself. But yeah, so the answer is the model and the framework that you learn underwriting, kind of the standard process, definitely gets translated into other things. But the spreadsheet that we use is really tailored for apartments specifically.
But that said, just a quick shout out. Seth has been paramount in our underwriting and these really creative ways, and having call outs and stuff that we were blind to. So just because his niche is maybe particularly multifamily, don't let that scare you away. He has saved our booties big time.
Well, I appreciate that. And like I said, I mean, the framework works, right? You're trying to uncover where the value is, where the opportunities are, and that's true with really any investment structure, right? So, if you come at it from that standpoint, what are the risks? What are the opportunities? And we're all looking for asymmetrical returns, in anything that we do, right? So we're looking for the lowest amount of risk with the potential, the highest potential upside, in whether it's real estate, whether it's, businesses, et cetera. So I do think that 2025 is really an interesting year ahead of us. And one of the things that I talk to people about is like, don't be afraid of looking at different models, right? I mean, the whole landscape of everything this country has known is being shook up right now, for better or for worse. And this is not a political, position. It's just is what it is, right? So things are changing, and don't be afraid to change the model. And, there's people that are, have never done RV parks, and, they're in RV parks. Terrell, I see, is on the call, right? So, there's people that are looking at assisted living facilities. There's people that are, looking at, actually, I will say this too. One of the interesting things about, and this happened about 6 months ago, and I knew that there was going to be some big shifts on the horizon for 2025 when this happened. Airbnb, I don't know where this is at right now, but Airbnb was looking for a commercial operator to join their Airbnb team to specifically do Airbnbs for apartment complexes. And I don't know if it was going to be a portion of them or have a whole apartment complex, because I don't know what the difference with that, between that and, boutique hotel or a standardized hotel would be. But it sounded to me like they were looking to do, if you have 100 units, they'll apportion off 20 of those units to do as short-term rentals, and the other 80 units would be long-term standard rents, right? So I don't know if that's taken off, if it's launched or anything like that. But again, I saw that, 6 months ago, and that was kind of a precursor to go, okay, models are changing, things are going to be shifting. And that's just, it's good. It's good for the, it's good for the industry. There's new technologies coming in, now that hadn't been before. There was a company called New Market, who's an institutional debt lender, and they just completed in, I think, November, the first, as far as I know, deal where they actually required the general partnership and ownership team to not just collateralize their debt against the real estate, but also hold a portion of reserve funds in Bitcoin. And so now you have cross collateralization between a cryptocurrency, technology, and, kind of standard tangible asset type of thing. And it's the beginning of, a new wave of things that are coming out. And, I think with the kind of humdrum 2024 and into 2023 that multifamily had, new technologies are the spark that can change all of that in an instant, right? So there's now opportunities to put, real estate title on the blockchain, right? Which is a whole new way of doing things. And I think if title companies that are not looking at and heavily investing in, blockchain technology opportunities and things like that, I think, over a certain time period, they're just going to be obsolete, right? So I don't know if it's this year, I don't know if it's 5 years from now, I don't know when it's going to come out, but there are companies doing it. We have a couple residential properties that we've put their title on the blockchain already, right? So, just to kind of see and see how it goes and what the process is. But, if companies and individuals aren't innovating and looking at new models and things like that right now, like they're going to be left behind. There's just no question about that.
Well, I'm so glad that you brought up the just diversification of assets, right? Which this question I never asked you is, what does your current investment portfolio look like across all of your various investments?
Yeah, so we do, I've done some consulting work with a Y Combinator company, which is Y Combinator is the incubator. They're actually the largest venture capital firm in the world now. They took over Andreessen Horowitz and Sequoia Capital and things like that. So born and raised in San Francisco in the Bay Area, so it was always kind of just there. Even though tech wasn't really my thing for a while, but when I got back, specifically focusing in the reentry space where tech is abhorrent, right? I did some consulting, like I said, for a company that was working on an employment platform specifically for people with criminal histories. And in that process, you just learn a bunch about, the right ways to do startups and things of that nature. So, I've invested in a couple different startups. I was living in Louisiana for the last few years, and seeing how that state is run, I was thinking originally that, kind of the next level up for that state would be a tech, would be a big tech company that come there and really kind of put it on the map as far as tech. But there's a bunch of reasons why that's probably going to be a bigger challenge. But one of the things that I learned while I was there, and this is what you do when you know, are working in your backyard and kind of understanding, you know, real estate in the area that you're in, is look for, you know, the next driver of demand, right? To be in that location, and demand will, you know, will build up, especially if there's a, you know, a slower paced supply. It's economics 101, right? If you have a slower supply and higher demand, right, prices go up. So one of the things that I found out about Louisiana is how just, you know, energy strong it is. And so, you know, I've invested in some energy companies from there, and, you know, startups and things of that nature. So, you know, it's kind of diverse. I do like the crypto space. I like the technology of it. And, you know, I really like the blend and the overlap. If you had a Venn diagram of kind of the things that I'm interested in, which is reentry, you know, real estate and technology, you know, combining all of those things, there's a sweet spot in the middle that I really just haven't figured out where it all kind of combines yet. But I think there's something definitely there where it's, you know, kind of a technology based, you know, transitional facility for people that are going through a reentry, you know, that, you know, where there's investors and partners that own the real estate that are doing this model too. So I think that's kind of the next, you know, evolution of what I'm looking at, you know, as far as a new model. But yeah, and so it's energy, tech, and real estate is kind of the broad scope stuff.
Love that. I have this is kind of like a little side tangent.
Hmm.
Whenever you talk about like how much property or just funds under management, do you talk about lifetime under management, or you talk about what you currently have under management?
Yeah, so it's current. And you know, like it's fluid, right? Like, you know, the door count is fluid. You know, we're selling some stuff right now. You know, we're looking at acquiring some new stuff as well. So it's always a fluid number. You know, I think a lot of people like to talk about a dollar figure of assets under management, and you know,
Yeah.
it's interesting, right? You know, it sounds good, and but there's so many different ways to skin a cat in this business, right? You know, somebody could be, you know, you could, you know, technically our you know, between our partners and I, right? It's a few hundred million of assets under management, right? Am I involved in all of those specifically? Do I have, you know, majority ownership? No, right? Like there's a, you know, the sliver of what, you know, what you're in, and this is a team sport, right? Which is just the way it should be and the way it's supposed to be, and you know, all that. So it's a little bit deceiving when when I see people talk about, you know, big assets under management numbers, and it's like, okay, but how much of that are you actually, you know, an owner of? How much do you control in that? Do you have any say in the GP at all, right? You may, you know, somebody may say they're you know, they got 60 million or 100 million of assets under management and have no GP say, right? So
Right.
you know, there's a lot of
Yeah,
different ways to skin that cat for sure.
absolutely. And you know what they say in Louisiana is like you have to keep the head on to know if it's a cat or a rabbit. So
Exactly.
You ain't lying.
Got some swamp culture coming out on this webinar.
They got some, definitely some funny sayings out there too.
Oh,
Especially
dude,
with
that's a
one
real
of the things
thing.
I learned about the alligators out there is calling them swamp puppies. That was also like, I'm like, oh yeah, let's put a collar on one of these things and see how well it walks.
That's awesome.
Hard pass, dog. Count me out of that
Yeah,
activity.
no,
I'll
me
swim with
too.
sharks all day long.
That's where I'm out for sure too. I'm not doing sharks, and it's not, nope, not even a threat. You have a dolphin close to me, I'm gonna just crawl up in a little ball, and you'll be like, all
I'll
right,
grab you. I'll hold you, Seth. I
yeah,
got you, my
I'm
SETH
gonna need it
friend.
for sure. Definitely would need it. Sharks and snakes, I don't do those.
So going away from the animals and everything, and I just saw Creighton just hopped on. I know he's been swimming with sharks over in the Bahamas with
Wow.
Blackwater Voyages. They've been cruising the Bahamas for a while, so shout out to you guys for hopping on.
Okay.
Kind of going to your approach in commercial real estate. Like, one, what's your investment criteria, and what's your approach to that?
Yeah, for sure. And so for the past years, it's been 50 to 250 units, you know, B, C, D properties that have some sort of value add component to it, right? So that's kind of the general broad scope. Inside of that, you know, you go, great. What are you really looking at? We want to get into something that's got, you know, that's in the path of progress, right? So we want to see where the demand metrics are. You know, one of the things that, and if we're looking at, you know, new kind of emerging markets, we always look at job growth numbers, right? Household formation. Those are the primary drivers of demand. You know, is there population growth next, right? What's coming out there? You know, what really is the opportunity? And, you know, understanding that I've switched markets a bit and still very bullish on, you know, on Louisiana, you know, some of the areas of Texas, although that's, I think, still has a little ways to go to absorb some of the supply that's gotten, you know, built over in Texas. So you know, and I'm looking at more stuff in California now too, which everybody goes, California, why? You know, what's happening? And really the reason is, you know, if you're looking at especially C and D areas, you know, kind of value add opportunities, ideally you're in the 7 to 10% cap rate range, right? For those types of projects. What's happened over the last 2 years is that costs have risen, you know, price of insurance has gone up so much that you're in these, you know, projects, and we have a couple of them too that are now 5 cap, you know, projects, right? But they should be, you know, 7, 8, 9, 10 cap deals because of the areas, right? So what we're looking at now going, well, if we're going to be in 5 cap, you know, projects anyways, let's be in 5 cap markets, right? So California is a 5 cap market, sometimes a 4 cap market if you're in the city, you know, in San Francisco or in some of the areas in Los Angeles. So we're looking at, you know, we would want a newer product, right? We wouldn't want, you know, some of the 70s builds and things like that if we're going to be in a 5 cap market. So, you know, and also we've kind of changed the range. California is a bit of a different animal. So it's really B and C properties. 25 to, you know, probably 150 is probably the cap of unit, you know, size that we would go in California. But you know, but that's kind of the thing. And again, it's, you know, when you're talking to brokers and things like that for the first time, they want to know kind of what you're looking at. You know, if you're syndicating projects, right, you're gonna try and force the value add. You know, you're not gonna just say, hey, you know, we got, you know, a few, you know, $10 million to just park, right? You're not parking capital. You're looking to actively grow value, right? Which is, I think, everybody on this call is looking to do. So, you know, you want to make sure that the brokers that you're talking to know that, right? You know, that they know that you're going to be an active, you know, active ownership group, and you're gonna work towards, you know, executing on the business, you know, the business plan for whatever that value add component is going to be, and they need to know that. So that's kind of the structure. One of the things that, you know, is interesting. I tell everybody, you know, have 2 primary markets that you're looking at. One absolutely has to be your backyard. Right. Just, and people go, well, I don't want to invest in California. I don't want to invest in, you know, Ohio or wherever the people are living, right. Or Hawaii, wherever, right. Like, and that may be true, right. You may, you know, or there's no deals here, or you know, the cap rates are wonky, or, you know, I don't like the people or whatever reason. But the thing that you get from actually looking in your backyard is you get to meet brokers, you get to see them for coffee, you get to go walk projects, you go see things that you wouldn't see, you know, if you have to fly out somewhere. You can't develop a relationship with brokers, you know, that, you know, it's hard enough to having a long distance relationship with you know, a partner, right? Than you know, than it is to try and build a relationship with a broker who's got, you know, talking to a bunch of different people and all that stuff, right? To say, hey, you know, send me your good deals. Don't just send me your, you know, the ones that have been picked over, right? So, so backyard primary, you know, as a primary market, and then pick one other market that you can go really deep into, and, you know, and just kind of understand the real deep level dynamics that are happening in markets. And again, you know, everything's shifting, you know, in 2025, all markets are shifting, things are becoming hyper local, you know, and it used to be this way in the residential side where, you know, you could have a house, you know, buy a house on a block here and it's worth X, and you have, you know, another property on, you know, 2 blocks over and it's worth Y. And it was just like, that was expected in the residential space. You're like, oh yeah, that's a good street, right? The 2 blocks over street is not a good street, right? So, you know, you go, great. Now, you know, and multifamily is pretty insulated from that, but now multifamily is getting hyper localized like that as well too, right? So, you know, and that you know, that wasn't the case for a long time, and now it's just becoming more. So you know, it's a different animal, it's a different, it's a new, new marketplace, across the board. So, a lot of those things you can't know those things unless you're really going deep into the areas, right? You can't know that, this street's good, or this location's good versus, 2 miles away is not, it's like that type of thing is you just really want to know, and you don't know if you don't go deep.
Mhm. Totally. So this kind of segues perfectly into like the next question, just talking about your accelerator program. And like from my understanding is to streamline all of this for you, everyone's trying to talk to you about all these deals, and I think the accelerator program helps streamlines that process. And the question to kind of kick off this discussion is, what is it? What is the accelerator program for everyone listening?
Yeah, no, thanks for that question. So one of the things that happens, and again, with my experience in technology and with Y Combinator is an accelerator platform, right? They take, and they've seen over 1,600 companies at this point. They've had the most unicorns in any technology, incubator, accelerator, out of any of the big players, right? And a unicorn is a company that's done over $1 billion, is valued over $1 billion. Right. So it goes from a startup to $1 billion plus. So there, and it's the reason why they were able to do that is because they have a pattern. They've seen what happens, there's a difference between what's going on in the textbook, right? Startup 101 textbook versus, the real world. And some of the stuff is different than what you think, right? You think you're doing the right things, and you just don't, you don't realize that you're off track. And having somebody, Paul Graham and Sam Altman, who's the founder of OpenAI, ChatGPT, right, was one of the founders of Y Combinator. And you just start seeing stuff that works in the marketplace. It doesn't guarantee success. Nothing does, right? But having people that go, hey, like, you're looking left when you really should be looking right, right? And it may feel like looking left is the right thing to do, but trust me, right? I can see your path. Sometimes better, it's easier for other people that have gone down that pathway to see the direction that you're going in versus ourselves, right? And I have coaches and mentors, I still do to this day, right? That are looking at me going, all right, where's the next goal? Where's the next level? And are you doing the things that are going to get you there? And so that's really what the accelerator is all about, is going, all right, what are your goals? What's going on there? And basically everything I know is in the accelerator as far as the multifamily space. And we have recordings of calls, and a lot of the information that you'll need from an information base. But really, it's not, lack of information is not what any of our issues are when it comes to reaching our goals, right? It's because if that was the case, like we have the power of the the entire world through the internet on our phones now, right? It's not a lack of information. There's something else that's going on there, and it's really just specific to each person, right? So where are you at? What's your goals? What do you want to do? And then doing that. And so that's what we do in the accelerator. We have, we meet every week, live calls, and, we go through each person's deals, projects, what they're working on. And it's a good opportunity to kind of hear people. And this is something that is good for, as everybody's working with investors and partners, right? There's certain ways that we come across that seem, whatever, they're just us, right? But when other people are looking at us, they go, oh, actually, like, like that broker in the example of the yellow building, right? Like he for sure I didn't know what the hell I was talking about. I didn't know that I didn't know what I was, didn't know what I was talking about. But I mean, I kind of did, obviously. But as like I thought I was saying the right, the smart things and all that. But he knew that I wasn't a commercial guy, just because of the way that I was talking and the things that was going on. And he can pick up on that. And so, it's good to have somebody going, hey, I don't know if you do this thing, you do this thing, or you say this, and if you say the wrong thing to an investor, they know, that, it's not something that they can trust you if things go wrong, and you're gonna try and pivot out of it, or you're gonna try and do whatever they just know. And so it doesn't bode well. So anyways, the accelerator is to help each individual that's going through that, not just know the process, but also, go through deals specifically. And you know, for the right projects, you know, we'd sponsor projects and, you know, help bring in capital and partner, you know, on the general partnership side too. So it works out, well for, I think, everybody involved.
Yeah, there's so much room to collaborate. I mean, we've met Patrick through your program and
Yeah.
gotten to brain dump with him, and there's just so much value in community and unity. And
Yeah.
like you mentioned, real estate's a team sport, and that's kind of the beauty and allure to it. 'Cause, like, I'm not the master at everything. Markets are constantly shifting. We're constantly having to innovate. Before I kick off the Q&A, I personally have a question.
Sure.
Like, as you mentioned, markets are constantly changing. There's so many podcasts, so many mentors, so many coaches. How do you choose which one to listen to with all the noise out there? Like, how do
Yeah.
you know what's credible? And especially when it comes to real estate investing, to someone that's maybe new, wants to passively invest or actively get in there. Where do you start? What are some key steps?
Great. It's a great question. I think you have to be very cautious of the information that you're putting into your brain, right? The inputs that are getting in there. And one of the things that's very clear to me right now is that nobody knows what the hell is going on. Nobody knows. Even the, you know, even the current administration that's in the White House, they don't really know. They're treating this like a startup, which is great, right? Like you know, again, it creates opportunities and all these amazing things that, you know, are potential for our country. And, you know, right, wrong, they're going to make mistakes, they're going to fail on certain things, or, you know, but they don't know. And anybody that can't admit that they don't know, I run from. Right? If anybody says this is what's going to happen, this is how it's going to be, especially in this time, right? You always have to be careful of those types of people because, you know, there's just opportunity is created in the realm of I don't know. Right? You know, people think people are embarrassed to say I don't know, or, you know, there's no embarrassment at all in going, look, that's a great question. I don't know the answer to that, but I'll tell you what, I'm gonna find out. Right? But you know, people that are either trying to steer you wrong or are so insecure they can't say I don't know, or whatever's going on, I just can't you know, trust. And so, you know, the people that I pay attention to are in the space of, look, we're paying attention to this thing, you know, clearly we got a good finger on the pulse. You know, this is what happened today. I don't know what that leads to. You know, here I think it's going to be this. We're hypothesizing on that, and you know, they're in that modality. And you know, I mean, there's a ton of smart people in the space. There's a ton of really great things. You know, great kind of influencers and, you know, economists and you know, but I think, you know, there was the FOMC meeting yesterday, right? And Jerome Powell, who's the head of the Federal Reserve, you know, literally says, I don't know what's happening. We're gonna continuously monitor the data. And I respect that.
That's
Right.
super respectful.
Yeah, I respect it. Now, do I agree with everything he's done? You know, do I think that there's going to be some, you know, some things that are going to change? Absolutely, right? You know, but you know, even he's like, look, we're looking at the data, we're seeing what's going on, we're being, you know, we're trying to be nimble, which for, you know, the Federal Reserve is quasi-government, so I won't give them full government credit, but you know, for a semi-government agency to say that is great, and I think that's what's happening, you know, with the new administration, you know, coming in, and you know, there's questions around the tax, you know, the tax positions that you know are going to be there. There's in 2017, you know, there was a big tax in the Jobs Act, right? The big tax cut for multifamily real estate and the bonus depreciation that was set, well, I guess still is set to expire in 2025, right? So you know, we can anticipate that that's going to get extended, which is great and would be a whole new opportunity for, you know, for multifamily projects, right? But, you know, at this point, we don't know if that's going to be the case, right? So it's still set to expire and we haven't gotten any new information. So we're just going to, you know, monitor that and pay attention and go. But that's a great question as far as, you know, who to listen to. If anybody says this is what's going to happen, and I can say 100% with full clarity that, you know, this is it and that's it and and, you know, be very, very cautious.
I have another question, again, being selfish before I open it up to Q&A. What are some of your, like, your daily reads? Because I feel like you are so knowledgeable in just the economics, politics. What are some metrics that you read and keep track of when in the real estate space?
Great question. What's funny is, so I have a 17-year-old daughter, and um, hopefully she watches this, but if she does, my secret will get out. And I've programmed my social media to the things that I want to know, to the people that I trust. Like I said, the thing, and I'm not, so it's not just a blind, dog videos or cat videos. Not to say that there's anything inherently wrong with that, right? But I don't get those, right? I see stuff, from the people that I want to follow. And I've been seeding her feed. So I'll grab something, I'll grab a link, and I'll shoot her a text and be like, "Hey, you ever see this?" Right? So knowing that the algorithm is picking up on that, and the more
Going to her phone.
exactly, and the more I seed her feed, the more she's going to see this thing, and it's over and over and over again. So, Ava, if you're watching, my secret's out. I love you, but but so a lot of it comes down to that. The Federal Reserve controls a lot right now. The markets are kind of stagnant and locked up because of high interest rates, high costs, right? So, Trump put a mandate out, the other day that, to lower interest rates. We'll see if that actually plays, right? And, Jerome Powell didn't really kind of give any credibility or anything like that to it yesterday. He said, he's just not gonna, he hasn't talked to, current administration at all. And, that's not how it technically works anyways. And even with the Feds dropping their rates, it doesn't necessarily translate into mortgage rates and things like that. So there's a few economists, that I like a lot. Peter Schiff is a good kind of contrarian economist. And there's a lot of different people that are following the space, pretty heavily. But there's economic indicators. You get, the Bureau of Labor and Statistics is a great one to look at and just get the numbers. And even then you got to unpack some of the stuff that they're saying, right? And the way that they've analyzed, and formulated different metrics has changed over the last few years, right? The PCE is coming out tomorrow, and the way that they used to do PCE is different than the way they currently analyze it. So, what does that mean, and what is it? How does it play out in real estate? And you used to, I guess it was less fast paced in the real estate market, right? And than it is now. But it definitely feels, and this is again just a light feel, but a kind of a gut feel thing, that it feels like something is about to change pretty dramatically, right? On a bunch of different fronts. It feels like technology is really about to explode. Things like that are happening. You got regulatory changes that are happening from the administration. You have technology changes that are happening in the space, right? You have consumer preferences changing, right? The way that tenants are, or what they're expecting for rents, things of that nature, are, in a building are changing. So there's all these shifts right now that are happening. And again, some of it's scary, and some of it's really, creating great opportunities. So, we'll see how it all plays out. But that was a long answer to your question. So
I loved it. I took notes. Thank you. I appreciated it. Okay, now I'll be not selfish and I'll open it up to other people's questions. You can unmute yourself, you throw it in the chat, I will relay it. But I wanted to give everybody an opportunity to ask questions, to learn from our mongrel, to learn from our mentor, our friend, and our tallest friend at that, for all of us.
Hey, friends,
there's
I got a
Clayton.
question. Hi, sorry for Will, you are
You look
correct.
great.
Thank you. I'm currently on a boat in the middle of the Exuma Islands in the Bahamas, and I'm so happy that this is happening, that we have Starlink to actually connect.
Speaking of tech,
it's incredible.
right.
Yeah, dude. We're sitting. Yeah. Anyway, one question that I have for y'all is, over the last year, I feel that I've seen it's been the rise of AI. You see people talking about and putting artificial intelligence in everything from toasters to coffee makers to boats and cars. I just feel like everybody's like, oh, AI this, AI that. Is AI currently being used to a real strong extent in real estate? Is that something that you guys use to analyze deals or figure out what you're going to do?
I know for property management teams, like those little chat boxes eliminate 60 to 80% of what a employee or team member would. And that's not saying that AI is taking jobs away from people, but rather it's eliminating the mundane tasks so that the team members can then focus on the experience of the tenant or the guests coming to the hotels, retreats, etc., storage units.
So it's freeing up your time to do the important things.
Yeah, but for underwriting, it would be amazing, specifically if you could just like give it your deal and it just magically did it. But
Well,
Yeah.
if I could jump in here for a sec, Nico, you told me a really cool thing the other day. It was like some hotels are actually using AI to go in and speak with a tenant, say it's multifamily or boutique hotels or whatever the issue may be. And the AI is just like answering all the questions, running diagnostics, and asking like the same questions that the worker that would come in, asking all the same questions. And so by the time the person who gets there to address the issue physically, he has a list of things already like drawn out to where he just goes, okay, all of this was tested, here's the issue, and he just pops in and then should, quote unquote, be able to come in and fix it pretty immediately.
well, then on that note, for the investor experience too, people are making custom AI. So like your investor can come in and be like, what is my ownership? What is my exact ownership percentage in this fund or in this syndication? So those are some ways. I don't know if anyone's super mastered it, but I know people are making it in process of it.
Yeah, I'd like to add for sure. With AI as well, we're able to receive data a lot quicker. So dynamic pricing becomes a lot easier to do when we need to raise our prices for our hotel rooms or Airbnbs or whatever it is, when we need to drop them based on travel rates and things like that. Through AI, we're able to receive that data a lot quicker. So that helps on the profitability side for sure, where AI helps.
Yeah, we are seeing a lot of integration with AI into different real estate. And Nico, you're right, 100% on the property management side for sure. On the underwriting side, it's being implemented now for sure, and you can definitely do that. One of my partners, Vanessa Alfaro, she's great with that on the underwriting side. I am a bit old school when it comes to the underwriting piece, and I love AI for system structures and things of that nature, and especially on the property management side, it's great and very helpful. I think there's just something, one of the things that AI can't do currently, and it probably changes maybe this year, maybe next year, who knows, but is really understand the nuances, right? Like, you can have a conversation with a tenant and that tenant, may say something and the words aren't really the important part of it, but the way they say it, you pick up on it. And as humans, we can start going, hey, there's something there. Like, sounded like, this and this and this, and you can start unpacking things. And that's where a lot of the discovery, from whether you're dealing with a broker or a tenant or whatever the case may be, that nuanced kind of thing that AI doesn't pick up on just as much yet. But I think that's also coming. But the funny thing is, when we talk about AI, whether it's design or, system structure or whatever it is, this is the worst that it's ever going to be. Yeah. Like it's only going to get better from here, which is pretty crazy to think about too.
All right, those were great answers. Thank you, guys. Seth, you have a whole wealth of knowledge about this. It was really great listening to you. Thank you for your time.
Absolutely, man. Great question. Thank you.
Thanks, Creighton. You look like a lobster. Love you,
No,
buddy.
stay
Love you,
sure.
buddy.
You'll stay. It will bronze.
Yeah. Patrick, I see your hand up there. Go ahead and unmute and ask your question.
Hey, sorry, I got 1,001 questions, but I'm driving, so I'll just do the simplest one. And Seth, I don't know why I've never asked this question before, but how do you determine a legacy property from a just a flip property, essentially?
He's
Great
like, that's a
question.
simple question. That's such a good question. So powerful.
I think one of the reasons why you probably haven't asked that question is just a kudos to your evolution of even understanding the framework to ask that question from. So good for you, man. I think that the best way to really kind of understand that is you have a hold period when you're taking over the property, right? And if you fast forward, say the whole period is 7 years for this specific property. If you would say, I want to own this property outright without any investors after those 7 years, like that's a legacy property. If you get to that point, you're like, no, we want to get out of that property and into something else. It's just not, right? So, fast forward yourself, for the end of that hold period and go, would I want to carry this forward if I was the only owner in this? Right. And if the answer is, yeah, I love this place, I love this area, I love the, want to keep it moving, et cetera. Great. Maybe you never sell it. Right. And that becomes that legacy piece. And if it's like, no, this is a stepping stone property. We want to come in, get in, pay our investors back out, sell it, and get into a new market or, a different property in the same market or whatever, then, that's kind of the framework that I look at stuff from. So, and also, a lot of times older properties, unless they're in just amazing areas, right? You're kind of in, you do some renovations, you can get out, right? And if the property's new and you go, great, I can hold this thing for the next 60 years, and it'll be great, in 60 years, and as it is today, then so be it. But I think fast forwarding to the end of your hold period is kind of the real determining factor of if you want to keep it, if you were the sole owner, from then on. It's a great question, man.
Thanks, Patrick. So I just want to open, I think I have enough time for one more question from the audience. Does anybody wants to unmute and ask? In a few seconds, maybe.
If not, we're ending with a banger.
Yeah, we got a good question if that's the case. All right. Well, again, thanks everyone to show up as well. But let's Nico go, or Jackson. I think you wanted to ask this one, right?
Yeah. Either way, yeah. Thank you. Yeah. As we kind of wrap up here, Seth, when you hear the words impact investing, what do you think of, and what does that mean to you? Obviously, there could be a multitude of different definitions for that. I loved how just a side note, I loved how you're still involved in the re-entrant space. I had no idea about that, about you. It says a lot about you, and I love that. But maybe you can elaborate a little bit more on impact investing and what that means to you.
Yeah, no, it's a great question, multifaceted. I think the impact side of things is really a double bottom line return, right? So if it's non-impact, you're looking at profitability, period, right? It's a X's and O's numbers type of thing, right? You go, okay, great, put X amount of dollars in, do we get more money in, back than we put in, right? Easy. That's one level of the bottom line. The other side of that is the impact bottom line, right? So now you're looking at, two bottom lines. How do we measure impact, for one, right? What are we measuring in that? And sometimes it's quality of life, right? Sometimes it's, for example, in reentry, one of the most important things during a person's reentry from prison back into the world is employment. Right? Can they get a job? It's one of those things it's the closest thing to a silver bullet for people staying free than anything else. And so you can measure that, right? Are people getting jobs, right? And are people able to work? And it's, it doesn't have to be the dream job, right? It's just, are you able to get into the workforce? Great. And then can you work yourself up? So you can measure that, right? You can go, okay, great. Now that's having an impact there, as well as, are you able to, capitalize on the investment profitably too? So I think the double bottom line return is the framework to work from, when it comes to impact investing, and really understand, it's easier to actually understand profitability than it is to measure impact, right? Because you got to know what your drivers are and what you're actually trying to measure in the impact space, right? So, but that's the framework you want to work from for it.
So good. Such a great answer.
And then off that, how do you invest in yourself? How do you nourish yourself so that you can create impact to the outer world and radiate to your community?
Yeah, that's a great question. I think taking care of yourself, trying to eat well, hydrate, things like that, that are just fundamental. One of the things, I don't know, he's pretty abrasive, I think, and people either love him or hate him, but I think RFK Jr. is really, onto a lot when it comes to being aware and being conscious of the inputs that we're putting in ourselves, right? Now that we talked about informational inputs, right? But it's also food inputs, it's also quality of water inputs, it's also, you know, red dye number whatever, right? That you know, they're now going out and maybe this is bad, right? You know, it's like that type of stuff that you know, people being conscious of that is a big piece of self-care, taking care of it, you know, taking care of yourself so that, you know, you can show up for yourself and your family. You know, we didn't do for 2025, you know, we're in January now. It feels like the longest January ever, but you know, we didn't do a you know, kind of resolutions this year. But what we did do was we did a kind of a primary word that we want the year to be. And you know, my word for this year is overflowing, right? Really, I want to pour into other people and pour, you know, and whatever that looks like for them, you know, my family, friends, people in the accelerator, you guys, you know, everybody that's kind of in my sphere. And you know, and the funny thing is, the more I do that, the more I get filled up, right? So it's pretty amazing when that kind of happens. So so anyways, yeah, that's I think self-care is a big, you know, is a big part of it. And you know, especially during turbulent times, right, which we're in, you know, it's really important for everybody to, you know, be conscious, find the things that you like to do. I like to play basketball. One of my knees is getting worse and worse, so I don't get to play it as much as I used to. But you know, that type of thing is critical to know and do. And you know, in these kind of turbulent times and changing times, it's important to you know, to have that there for sure.
Cool. Thanks, Seth. So just one last question. How can listeners and followers find you on social media and also get involved with the accelerator program?
Yeah, for sure. No, you can follow me on Instagram is the best one. Seth Sundberg. You know, it's at Seth Sundberg, SUNDBERG. And if anybody's interested in the accelerator, you can go to 7foot.capital, SEVEN foot.capital. I'm 7 feet tall, so it's the most boring branding ever, but you know, it seems
Accurate.
to stick. So,
It gets
exactly.
the point across.
Yeah, exactly.
Cool. And then one final question. I know this is I'm gonna lose this one, but I want to challenge you to a game of invest/horse. Whenever you make it down here, to back down New Orleans area or in San Francisco, wherever that game can be played. But I'd love to challenge you a game of invest and ask some questions there. Maybe get that filmed as well. Is that something that you'd be interested in doing?
Sure. Yeah. What's the game?
Invest, like horse, but with basketball.
Oh, gotcha.
Yeah.
For sure. No, we can definitely
I'm
do
pretty
that.
sure. I'm pretty sure I'm gonna
Can we
lose,
put
but
can we put votes on this? I put money down, dog.
What are the odds?
You might be a better shooter than me. You know, I'm not Steph Curry. You know, I'm a back to the basket, you know, type of big guy. So we'll see. I could probably got a, you know, still wicked jump hook, but you know, we'll see how it goes. That'll be
Seth,
fun. Sure.
my money's on you. I'm just
I
saying.
appreciate that. I appreciate
Will,
that.
you're twerk. Kick a soccer ball, dog.
They do say the jump shot is the last thing to go. So you know,
there we
still
go.
there.
There you go.
Well, cool. Well, I'm excited for that future game of invest.
Sure.
But again, Seth, thank you so much for coming on and spending some time with us this evening and just dropping us all your knowledge. Thank you to everyone who showed up on the call tonight. I know we said some last minute text there, but you know, I hope that everyone got some fantastic knowledge out of tonight. And give Seth a follow. If you're interested in an accelerator program, you can let us know. We'll get you in touch with Seth or just do what he said. And then if you're looking to invest in boutique hotels or other types of multifamily commercial real estate, let us know. We'd love to put you in touch with the people and investments that are best for you.